if you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
What would your advice be to people who are investing? What should they change? What should they do?
The best investment against inflation.
The best business to have during inflation.
One stock to bet on.
What's going on, guys? Today we have Warren Buffett, the Oracle of Omaha, and today he's going to be teaching us how to combat hyperinflation and market crashes. So if you guys enjoy getting tips from one of the world's greatest investors, don't forget to leave me a thumbs up. And if you guys are new to this channel, don't forget to hit that notification bell, smash that subscribe button, and let's enjoy this video.
Interest rates govern everything, and if there were a way to short 30-year bonds and own the S&P for 30 years, I would give you enormous odds that the S&P is going to beat 30-year bonds. Now, we've had this period of extended long-term low rates, not only here but around the world, and now it looks like we're not going to jack them up very fast. So we may be in a new world, the world that Japan entered back in 1990, and if so, stocks will, when we look back on it, will look very cheap. But, you know, this has not been the history of the United States to have these continued low interest rates. So if you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. If you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes. If you have a temperament that when others are fearful, you're going to get scared yourself. You know, you are not going to make a lot of money in securities over time in all probability. That if they didn't look at quotations, but of course the whole world is urging them to look at quotations, and more than that, do something based on small changes in quotations. But if you didn't think how much more rational, we've talked about it before, but think how much more rational investing in a farm is than the way many people buy stocks. I mean, if you buy a farm, do you get a quote next week? Do you get a quote next month? If you buy an apartment house, do you get a quote next week or month? No, you look at the apartment house or the farm and you say, I expected it to produce so many bushels of soybeans and corn, and if it does that, it meets my expectations. But they buy a stock and they think if it goes up, it's wonderful, and if it goes down, it's bad. We think just the opposite. When it goes down, we love it because we'll buy more, and if it goes up, it kills us to buy more.
The best business to have during inflation is one that retains its earning power in real dollars without commensurate investment to, in effect, fund the inflation-produced nominal growth. The worst kind of business is where you have to keep putting more and more money in to a lousy business. In effect, the airlines have been hurt by inflation over the last 40 years because now they have to put a whole lot of money in a lousy investment, which is a plane, compared to 30 or 40 years ago, and they have to stay in the game. They have to keep buying new planes. And the new planes cost far more now, and the returns continue to be inadequate. The best protection is a very good business that does not require big capital investment. You know, the best investment of all, I mean, if you're the leading brain surgeon in town or the leading lawyer in town or the whatever it may be, you don't have to keep re-educating yourself to be that in current terms. You bought your expertise when you went to medical school or law school in old dollars, and you don't have to keep reinvesting. And you retain your earning power in current dollars. Charlie and I are always suspicious that inflation will regain some of the momentum it had a couple of decades ago. We always think it's in sort of remission. We thought the talk about deflation was total nonsense. The price of oil in euros has gone up far less than the price has gone up in dollars. And you and I are buying gasoline in dollars, so we have seen a bigger increase in our fuel costs because of the decline of the dollar. 30 years ago, of the billion plus pairs of shoes used in the United States, a very high percentage were made here, and now virtually none are. But if they were all being made here, you would be paying more for shoes. There's no question about that.
There is a widespread perception that we're heading towards an inflationary environment. What advice would you give to investors who need to preserve their capital and their purchasing power in such an environment?
The best thing is to have a lot of earning power of your own. If you're the best brain surgeon in town or even the best lawyer in town, you will retain purchasing power in terms of your income no matter what happens
whether people are using seashells for money or whatever as time goes by. But in the investment world, it's tougher. But Charlie and I think the best answer is to own fine businesses that will be able to price in inflationary terms and will not have huge capital investment that is required to handle the larger dollar volume of sales. Unfortunately, most businesses will not come out well in real terms during inflation. Their earnings may go up a fair amount over time, but they're compelled to put more and more dollars into the business just to stay in the same place. The worst kind of a business is one that makes you put more money on the table all the time and doesn't give you greater earnings. You really want a business that can have pricing that reflects inflation and does not have very much capital investment. But inflation is the enemy of the investor in terms of real returns. As you know, there are, in this country as well as a half a dozen other countries, there are what they call inflation-protected bonds. We call them TIPS in the United States. The principal amount is adjusted to inflation.
One of the great defenses to being worried about inflation is not having a lot of silly needs in your life. In other words, if you haven't created a lot of artificial demand to drown in consumer goods, why, you have a considerable defense against the vicissitudes of life.
Charlie, we're selling consumer goods in the other room. It's okay to talk that way at home, but
doesn't do any good there.
Given the fact that we're dealing with fairly high levels of inflation in India, what would your advice be to people who are investing? What should they change? What should they do?
the best investment against inflation, Keynes said it many years ago that it's an invisible tax. Only one man in a million really understands, and it's a tax on people that have had faith in their currency the government's issued. The best investment against inflation is to improve your own earning power, your own talent. Very few people maximize their talents. If you increase your talents, they can't tax it while you're doing it. They can't take it away from you. If you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. The best investment, passive investment, I think, is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. It's interesting, in the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints.
In a period of high inflation, which particular businesses owned by Berkshire Hathaway will perform the best, and which will perform the worst, and why?
Well, the businesses that will perform the best are the ones that require little capital investment to facilitate inflationary growth and that have strong positions that allow them to increase prices with inflation.
If you had to pick one stock to bet on,
You kind of snuck up on us there for a second.
and be resilient in the inflation, which would you choose?
Well, I'll tell you something even better than that one stock. Maybe we'll get to one stock, but the best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, the best investment by far is anything that develops yourself. We have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
All right, so you don't pay much attention to the dismal scientists then, I guess.
Well, I pay none as a guideline to doing anything. It's entertainment. I mean, it's like going to a variety show or something like that. And I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. You may know he was a big shareholder of Berkshire, but it isn't going to change over the centuries because of anything or political developments or 400 other variables that go in. And the truth is, you've got to expect good times and bad times in business. If you were to buy an auto dealership and you're, wherever you live locally or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
Good evening. This is an extraordinary period for America's economy. Over the past few weeks, many Americans have felt anxiety about their finances and their future. I understand their worry and their frustration. We've seen triple-digit swings in the stock market. Major financial institutions have teetered on the edge of collapse, and some have failed.
It was a panic like nobody's ever seen. I mean, whatever you think about it, it was worse. I'm dead serious about that. We were right on the edge of the cliff. And fortunately, I give enormous credit to both Ben Bernanke and Hank Paulson. And frankly, even though I didn't vote for him, never voted for him, President Bush, I don't know how many of you have studied economics, but in Adam Smith, they talk about comparative advantage. President Bush really came out with the great economic insight of all times, and he did it in 10 words. In September of 2008, he went out there from the White House and he said, if money doesn't loosen up, this sucker could go down. And I mean, that goes right up there. Tear down those plaques of Adam Smith. and he backed up those fellows. And so we've come back from it. But businesses come back. A lot of companies are having record profits, including many of ours. And the American populace as a whole has not come back. I mean, inequality is getting wider.